Hello, my name is Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Self-Storage Quick Start Academy. Thank you for being here. The Self-Storage Quick Start Academy's first course, How to Buy Your First Self-Storage Facility, is available at thequickstartacademy.com, and in January we're launching How to Build Your First Facility, so be looking for that. And a mentor once told me that if you're born without a lot of money and you do not borrow money and go in debt, odds are you're going to die without a lot of money. And he also told me the difference between good debt and bad debt. Yes, there is such a thing as good debt. So in my world, good debt is when someone else is paying off your debt, and each month as the debt goes down, your net worth increases. To me, that's good debt. And in the self-storage world, debt is good. The tenants pay off your debt, and debt can take a self-storage facility that's generating, let's say, 7 or 8%, and with proper leverage, you can turn that into 10, 12, 14% just with the debt. So as we explore this final episode of building your business strategy for 2016 to come out and purchase or grow in the self-storage business, the role of debt plays a very important role. We probably don't talk about it enough. So, can you get a loan? When I was getting in the self-storage business, I could not get a loan that was big enough for the game that I was playing in the self-storage world. So I had to get people to go on the loan with me. And for them going on the loan, I ended up giving them ownership, cash flow, and some of the wealth that was created by going in the self-storage business. So can you get a loan? That's the question. Look, 15 or 20 minutes with a commercial mortgage lender, you'll know whether you can get a loan or not. So the final phase of this self-storage strategy you're creating is putting the loan in place, the right kind of loan. So if you're working with a lot of cash, and this is your first facility, a loan from a bank is probably the way to go. If you don't have a lot of cash, there are other options for you on the loans. We'll talk about them in 1 second. Just kind of a note though, including myself, most of the time when I'm negotiating with a lender, I have negotiated on the interest rate. And that is important. But here's what I've discovered. If you really want to impact your cash flow and impact the monthly payment, negotiate, spend as much time on the amortization period as you do on the interest rate. That is your pro tip for this morning. So if you're only working with a little bit of cash, an SBA loan, a Small Business Administration loan, really is a valid option for you. So with an SBA loan, you can purchase a self-storage facility with as little as 10% down. And these loans can be amortized up to 25 years in some cases. Now, like I said, amortization really impacts your monthly payment. So even though you'll have a higher loan to value, your monthly payment will be about what a 20-year loan would be with a lower interest rate. So it is a really valid option for you. Now, the pros of an SBA loan are you can usually go in with less money down. You have a self-amortizing loan, which means most commercial loans from a bank, they're going to amortize it over 20 years, but you're going to have to refinance it or replace that loan in 3, 5, 7, sometimes 10 years. With an SBA loan, you can keep that loan on as long as the amortization period goes. And it is something that the banks like because the banks have a portion of that loan guaranteed by the government. That's how the SBA loans work. They allow banks to make loans that they wouldn't otherwise maybe make, but if there's a default, the federal government will guarantee the bank up to a certain percentage of that loan. But as with everything in life, there are also costs to it. So the cost of putting an SBA loan in place are, one, you typically have higher closing costs. It can be up to 1.5% of the loan for the closing costs. Now, you can usually roll those in the loan, but it's still closing costs. The other negative, if you want to call it that, of an SBA loan is that the interest rates typically are a little bit higher than they are with a bank loan. Again, the amortization period kind of makes that up on the payment piece, but over the life of the loan, you are going to be paying more money because it is a slightly higher interest rate. My experience is if you're paying 4.5 to 4.75 at a bank loan, you're going to pay 5.25 to 5.5 on an SBA loan. Don't hold me to that. That's just my experience from the quotes I've received. The other piece, negative, if you want to call it that, is they generally take a little longer. There is more documentation. You not only have to be approved by the lender, but the loan and the facility and the borrowers have to qualify for the SBA program. So there's a lot more hoops to jump through than a normal loan. But all in all, it's a very good option, especially if this is one of your first self-storage facilities that you're buying. I've even looked at using SBA lending on some facilities, and we own a number of facilities. So it's a real good option. I don't usually do this, but I want to introduce you to a person named Terry Campbell. Terry Campbell works at the Live Oak Bank. Live Oak Bank is a bank in Wilmington, North Carolina, and Terry does nothing but put SBA loans on self-storage facilities. Now, I've talked to people who've used this bank and this person to put the loans on, and they've had very positive experiences. And the only reason I'm talking about this bank and this person is most banks will not lend out of the footprint of their market area. If you want to find a bank that will follow the buyer around the country, you usually have to go to the larger banks, the 5 big ones. Now, that's a valid thing to do. The only challenge is they are sometimes a bear to work with. I love the relationships you have with these smaller banks. And to have a bank the size of Terry's that is focused and committed to the self-storage space and will loan to a borrower anywhere in the country on any project in the country, that's a big deal in my world. That's a game changer. So reach out to me. There'll be a link in the blog, and reach out to me and I will give you more information and connect you to if you're interested in exploring an SBA loan with Live Oak Bank. As always, you should get multiple quotes, but I think you'll be very pleased with that. Again, I don't usually do this, but I think this would be a big help to people in getting in the self-storage business or growing their self-storage business. So you now have all of the questions and the spaces you need to go through to create your business strategy. Where's the money coming from? What do you want to get on your money? Why are you getting in the self-storage business? What is your criteria for acquiring a self-storage facility? What is your criteria for getting a loan? What is your exit strategy? Work through those spaces. Create your strategy and come out powerfully in 2016 growing your business. I know we are. In the next episode, I'm going to give you the strategy that we're currently using to successfully find and purchase existing self-storage facilities in today's really bizarre market where we can buy them such that we can generate an 11% preferred return. And I'll show you what we're looking for and why it's working so well for us. So we'll do that next week. So thank you very much for watching this episode, reading this blog. My name's Mark Helm. I'm the author of Creating Wealth Through Self-Storage, and I'm the creator of the Storage World Analyzer. The Storage World Analyzer is launching in January the construction and expansion module for the program. Thank you very much.